Most people assume the US dollar dominates the global economy simply because the United States is powerful. But there is a deeper system behind this dominance. A system built around oil, geopolitics, and global finance. Today we're going to explain the petrodollar system, one of the invisible architectures shaping the modern economy. Every country needs oil to power transportation, industry, and electricity. But most international oil transactions are priced in US dollars. That means countries across the world must hold dollars just to participate in global energy markets. But why does this matter? Oil is not just another commodity. It fuels transportation, manufacturing, agriculture, and shipping. Because oil sits at the center of the global economy, the currency used to buy oil becomes extremely powerful. After World War II, the global monetary system was organized under the Bretton Woods Agreement. The US dollar was tied to gold, and other currencies were tied to the dollar. This made the dollar the anchor of the global financial system. Under Bretton Woods, foreign governments could exchange dollars for gold. This made the dollar trustworthy because it was backed by a physical asset. By the late 1960s, the US was printing more dollars than it had gold to support. Confidence in the system began to weaken. In 1971, President Richard Nixon ended the convertibility of the dollar into gold. This effectively ended the Bretton Woods system. Once the gold link disappeared, the world needed a new reason to trust and use the US dollar. At the same time, global demand for oil was exploding. Oil had become the lifeblood of modern economies. Oil prices surged during the 1970s due to geopolitical tensions and OPEC actions. Energy security became a global concern. The United States reached a strategic understanding with Saudi Arabia, the world's largest oil exporter. Saudi Arabia agreed to price its oil exports exclusively in US dollars. Other OPEC members soon adopted the same practice. Global oil markets became dollar-denominated. Every economy requires energy imports. Because oil is priced in dollars, countries must acquire dollars to buy it. This requirement created constant global demand for US dollars. Oil-exporting nations accumulate large dollar reserves from selling energy. Many of these dollars are invested in US Treasury bonds, banks, and financial markets. Strong demand for US financial assets helps keep borrowing costs lower for the US government. Basically, oil trade creates demand for dollars, and those dollars return to US financial markets. Because the dollar is embedded in energy markets, financial influence and geopolitical influence become linked. Dollar dominance also allows the US to enforce sanctions by restricting access to dollar-based systems. Some countries are exploring alternatives such as trading oil in other currencies. Despite these challenges, the petrodollar system remains deeply embedded in global trade and finance. This is why the petrodollar system connects energy, geopolitics, and finance. It is one of the hidden systems quietly shaping the modern world.